Hey guys, so I often talk about premium and discount, and I do the majority of my trading within these levels. So I wanted to give a quick example on how you can implement these two concepts within your own trading style. So when talking about premium and discount, we want to be following these two rules. So rule number one is after an impulse higher, the market will retrace lower. We look for a drop below the 50% of the impulsive leg up to enter at a discount. This is our ideal buy setup. For a bearish scenario, after an impulse lower, the market will retrace higher. We look for a push above the 50% of the impulsive leg lower to enter at a premium. This is our ideal sell setup. So for a bearish scenario, we mark out our swing high and swing low. So let me delete the fibs so I can show it. So if we're bearish and we are like, all right, so we got relatively equal highs right here, and we want to be entering a short. We take our fib from the most recent swing high to our swing low, and we look for our optimal trade entry, meaning we want to be entering a short between the 0.62 and a 0.79 at a price action concept like a breaker or a bearish OB. So what you'll do is you can enter, as soon as you marked out your price action level, you can enter a short, and your stop should go above the high of the last up close candle, targeting the previous low. So this is for a bearish scenario. Now for a bullish setup, we swept this low, we formed a bullish OB at a key support level with a wide range body. So we know we want to be entering around this level. What we can do is we pull up our fib from swing low to swing high, and we measure our discount level. So as soon as it drops below the 50% of the range, we want to be entering near the optimal trade entry. So at this region, we are looking for bullish price action at lower time frames. We highlighted this OB. We got a fair value gap right here, so we know price wants to refill this to rebalance itself. So we want to be entering at this OB. And you got numerous chances to enter. Stop should go below the low of this order block. And our target is, well, we got a fair value gap right here, right? So this could be a target. And then we got the liquidity resting above this high, so it can even go up higher. But notice how beautiful everything fits together when you combine them. So, of course, price is fractal. And if you want to trade this leg lower, that can be done as well. Because if we're bearish right here, where do we want to enter? Well, we want to enter at a premium. So we pull up our swing high to swing low. Optimal trade entry. We have a bearish OB. Last up close candle at a key resistance. It reaches up into this level. We can anticipate a short. Our stop should go above the high of this last up close candle. And our target is the OB at range low. And that's it. There's nothing much to it. It's basically just a fib. And we want to enter below the 50% of these swing points.